We've been through the performance of the markets yesterday. Olusegun, what are you making of the activity we're seeing on that end right now?
On the Nigerian capital market?
Yes.
Okay. I think what we're seeing at the moment is a good reaction, actually, to the measures that the CBN has been taking over the last few months. I think that over the medium to long term, the transparency that's been created by the actions that have been taken recently are going to increase investor confidence in the Nigerian capital market, particularly in the banking sector. And I think from in the new year, we're going to start seeing more investors with more confidence coming back into the capital market.
Of course, Leon, when it comes to the Nigerian market, all eyes have been on the banking sector. It's what's dominated a lot of the news, but there's also interesting developments within the oil space itself. We know that OPEC September oil production data showed an increase in crude production for the second month in a row, and that's certainly encouraging from a macroeconomic perspective. But the question is this a positive development that's sustainable in your books?
Well, it's going to hinge very much on the political situation in the Delta. And as things stand, we haven't seen it deteriorate yet. We've seen threats by men that they want to resume attacks on oil installations. We haven't seen actual incidents yet. We have what appears to be quite a large percentage of militants who've given up their arms. So I would argue that at least for the next few months, things are still sort of on a stable footing. But we do need to see more progress from the government on actually addressing the underlying causes of the unrest. And one of the things that President Yaradua offered was a 10%, or has spoken about, is a 10% local community ownership of oil. Those types of things will help, and those are all very positive signs. At the same time,
Olusegun, I mean, Leon's mentioned just a few of the factors at play within that sector. We've also got the IMF having endorsed, the country's idea to actually put forward this reform bill that's on the table. International companies, however, are still expressing lots of concern about this. What's the reaction by these major oil players at the moment, those that are listed on the stock exchange, to the news that has emerged? Because the markets have certainly had quite some time to digest all of this news that's come to the fore here.
I think the general view is that, for many years, the international oil companies have had things really in their own way, in terms of governance issues, in terms of accountability issues, etc. And I think what the PIB is doing is basically making opportunity for more revenue allocation in that particular sector for the government, rather than overdoing things on the subsidy side of things. I think in the long run, so long as the government is accountable for its expenditure, it will be a good thing for the country. I think we have to, make up our minds whether we want to continue doing things the old way, we've always done things, or actually make changes in order to prosper our country in the future.
So in this context then, I mean, how are you actually playing the oil plays right now?
I'm sorry?
How are you viewing the oil plays, and are you dabbling in that space right now? If we look at the majors, ExxonMobil, Chevron, Shell, are you delving into some of those opportunities?
Not at present. I think most of us are looking more towards the opportunities that really are available, as you mentioned earlier, in the banking sector. So at the moment, I think many of us are still looking at how things pan out. And focusing more on, as I said, the banking sector.
Yeah, of course, Leon, I mean, the banking sector challenges have been unfavorable for the oil players as well. I mean, being anticipated was this increased difficulty to actually source funds for projects, to actually fund downstream projects. Just how much of a hurdle do you see this being to progress moving forward?
Well, it seems to be quite a major hurdle. At the end of the day, all these companies need to raise finance to go into their infrastructure investment spending, and we've seen, for example, just simply on the oil importing side as well. The refined product importing side, there's been hindrances because of lack of finance available for trade finance. So it has definitely played a role. If this petroleum bill comes through and comes through successfully, and they even deregulate the petrol price locally. Now that could have some social issues, but all of those will go a long way to addressing what are key vulnerabilities in the economy. I mean, interesting though, I mean, oil prices jumped materially in the last week, and that by itself actually bodes quite well for for the local industry.
Just looking at the banking space, Olusegun, I mean, do you see them anytime soon getting to a stage where they're starting to become a little looser with their lending policies now that transparency's come to the fore, now that they've identified some of the major defaulters, and many of these banks have started talking about actually tightening up their risk mitigating strategies? How soon can we see liquidity flowing back out there?
I think it's going to be, this has been a subject to discussion for a few days now, but I think it's going to be more in the new year, to be honest with you. We have for the first time, all the banks have the same financial year end. I think in most countries, you see banks closing their books in early December or end of November. I think because it's the first time here this year, they'll probably close their books a lot earlier. Of course, we have to bear in mind that with all the changes taking place in that sector at the moment, people are very cautious about lending procedures, etc. They want to put more proper structures in place. So I think we're going to be looking more in the first quarter of next year before we start seeing liquidity improve in the sector, in the market generally.
On that note, Olusegun, let's leave it there with you. Just to end off with a macro perspective here, Leon, I mean, we know that money supply growth accelerated in August. M2 jumped, to 565 billion naira for August. At the same time, we've got inflation continuing to decline. Looking at the fact that we've got money supply growth accelerating, could that pose a threat for inflation then moving forward?
Well, money supply growth is still relatively low. I mean, that jump in August was, of course, attributed to the stimulus package that went into the banks primarily. And there is still some of this growth left because of the further stimulus package and also the ECA release that came through. So, we can anticipate money supply growth, which grew at 13% year on year in August, probably to increase to something like 19% in October, or in September and October. That by itself is not a particular problem because it is still relatively low growth by African standards. I think the concern though is, the question did last year's currency depreciation, when in fact it was really the start of this year, has that currency depreciation filtered through to the economy in its entirety yet? Now we are talking about a period of 9 months, so we're sort of getting to that point. But it'll be interesting to see, we do have money supply growth kicking up a little bit, and the question is, has the currency weakness fed through in its entirety? We've had 5-6 months of inflation decline now, and the central bank seems to be confident it will decline. I'm a little bit nervous.